Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, February 20th, 2013. Well, a very solid black body candle, a very solid bearish candle today. A candle where we've seen the market close down at the lows, suggesting that the sellers have closed with very strong control of this market. Continuation of the trend in the second term time frame if we look at the series of lower peaks and lower troughs in this market, and once again as the market is selling off, as we've seen in this series of second time frame downtrend, as the market is selling off, we have these very solid bearish candles suggesting that the sellers are the strongest players in this market at the moment. Every time we see the market attempt to rally, we're rallying on fairly indecisive and weak candles, smallish white bodies in relation to the black bodies, so the buyers really don't have enough strength to change the trend in the second time frame at the moment. This does suggest that this market is destined for lower levels once again, as we've seen in the sell-offs in this market. There is a possibility, however, we could see some support here, and as we saw in the previous sell-off here, the sell-off lasted for one candle. We saw buying coming around the 133.20 level. We have traded down through there, but with this large black body, we have now seen the sellers make a substantial amount of net bearish progress on the day between the open and the close. It suggests that the momentum in that short-term time frame is with the sellers, but we are now trading within this zone of support and previous resistance that I highlighted in the recent past as a very important area for this market. We see here the large shadows on the top as the market rallied to that area, then the breakout up above, and then on the subsequent retracement back towards there, this area has held as support, so we should be looking to this area to hold as support for today's trading. Now that zone could extend down a little bit lower, but even below there we do have very strong support extending down to the top of the cloud, down around the 130, 170 area. The market has today taken out the 133.20 important level of previous resistance and support. This area was support for the past 1, 2, 3, 4 trading days, and we see the shadows on the top and on the bottom of these candles, and the market attempting to rally, but the 134 area holding as resistance for those trading days, 3 of those trading days, and for today's trading. The market has tested above the 134 area and tested above the Tenkan-sen, which is very important, and it does say something about who is the major player in this market at the moment, and it is the sellers. Very strong trending action to the downside. We see the market rally towards the Tenkan-sen and find resistance there, and today that's exactly what we've seen, and the sellers come back into this market. So there is a possibility for the market to potentially trade through this highlighted zone, but we need to watch how the market reacts down around this area. Now we have seen completion of a head and shoulders pattern, and it is a complex head and shoulders pattern. A couple of heads here and one head here in this region. A very strong prior uptrend that in the second time frame that we can't see here off the chart, and here we have the combination of the left shoulders, the head, quite a large head, and the right shoulder here. The breakout down below, the close below the neckline, completes the pattern, and it wasn't a terribly bearish breakout, but a very solid black body candle. A bit of size to the black body did suggest that there was quite some bearishness. We did worry about the potential for the market to break out down below the 133.20 and below this zone, and that is still in effect, the support from this highlighted yellow zone. But in a classical manner, this market broke out to the downside, rallied back towards the neckline, and found resistance there and sold off from there. And this is a classic way that a market will behave in a head and shoulders pattern. So we do have a target for this pattern. It's the distance from the head, the top of the head, to the neckline, projected down from the area where the market broke out, and we have a target at 129.68. Now, it's debatable whether this market will reach the target. We do have quite a few levels of very solid support down below where the market's trading at the moment. And we also have the cloud extending down through these levels as well. So I doubt whether we will see this market reach this target. So even though we have had this head and shoulders pattern confirmed, the support down below this area is really too solid for this to be a great trading pattern for us. In terms of Ichimoku, the market is still trading up above the cloud, and that's important. So the overall trend in the long-term time frame is bullish because we are trading above the cloud, but the market is now bearish in the medium and short-term time frames by trading below the Kijun-sen, the pink line here, and the Tenkan-sen, the green line here. And as we know, the relative slope of these lines says something about the strength of the trend. And if we look at the green line here in the short-term time frame, the trend to the downside is very strong, because that line there, the Tenkan-sen, is pointing down very sharply. And very often when we have a very strong first time frame downtrend, the first area that we find resistance is at the Tenkan-sen. So area at 134 around the Tenkan-sen is very, very strong resistance for this market, and will continue to be over the next few days trading. So some mixed signals in this market. Bearish in the medium and fast term time frames, bullish in the longer term time frame, but very, very solid support down below, extending all the way down to the 130 area.